Good afternoon, hello and welcome to MF Corner. I'm Sumera Abdi. Today we are going to talk about two types of funds which are making news these days. So first up, the debate around small cap investing with Harshad Patwardhan, Equities CIO at Edelweiss Mutual Fund. And a little later on the show, we'll talk about the ETF opportunity in India with Vishal Jain, the head of ETFs at Nippon Life AMC. So let's start with talking about investing in small caps. For starters, it's universally considered to be the most volatile set of stocks with wild moves on either side. Now take 2020 for instance, right? The pandemic-induced volatility has led to nearly a quarter of the stocks in the NSE small cap index to fall over 40%. 45% of stocks in the same universe have fallen more than 30% from their peak. Many experts now say that this big fall means that the worst of the correction in the small cap universe is over. So let's hash that out with Harshad Patwardhan, Equity CIO at Edelweiss Mutual Fund, and he also manages their small cap scheme. Hi Harshad, good afternoon. So it looks like small caps may just have turned the corner. The worst may be over, but despite that, a lot of experts don't recommend that retail investors, especially ones with low risk appetite, invest in them. So which kind of investor does a small cap fund target exactly?
Sure. Good afternoon, Sumera. Thanks for having me. You're right. Low risk appetite investors probably should not venture into small cap funds. What I have seen is that many long-time advisors who have seen the cycles, ups and downs of the market, recommend these kind of funds to investors who have typically minimum of 3 to 5 years of investment horizon, ideally longer, and particularly investors who can stomach volatility. I think volatility is, as you rightly alluded to, is an inherent feature of small cap investing. But many advisors actually make that volatility work for their investors by recommending a long-term SIP for long-term wealth building for investors. So I think those are the kind of investors who should be looking to invest in small cap funds.
Okay, I was going through your small cap fund presentation, and over there, by your own admission, you write that small caps are not actively covered by analysts. Don't you think there's a reason for this low coverage? I mean, why is it that somebody would trust putting their money in a fund where there aren't many people looking at how the underlying is doing? I mean, I don't mean you're not looking at the stocks you're investing in, I mean in general.
Sure. No, I'm glad you asked this question because there is a lot of misconception about small caps and also mid caps in our markets. First being, and that's often unstated, but typically people believe that small cap is equal to low quality. So let me say that that's absolutely not true. There are many small cap businesses or mid cap businesses which are of absolutely good quality. We must remember that we talk about small caps, large caps, mid caps, because SEBI has come out with this definition as to what is meant by large cap, mid cap, and small cap, right? It's just a rank definition. It's not a quality definition. So there are many businesses with very good management track records, good balance sheet, good access to technology. Just to give you an example, I will not name the stocks, but if you look at exciting opportunities like electronic manufacturing services, if you look at bearing companies, very high quality. Some of them are small caps. So small caps is not equal to low quality. The reason why they are not well covered, actually it's commercial. So if you look at institutional equities brokerages, they want to cover stocks that where their institutional clients are interested in so that they can cover and write commissions. Many of these small cap stocks are basically ignored stocks. And that actually is not a problem. It's an opportunity for people like ourselves, particularly the ones with long sell-side background. So we actually identify some of these stocks early on and buy them. Of course, you have to look at the quality filter. If you look at our portfolio, for example, we do not compromise quality while buying stocks for small cap fund. So if you identify those early enough before they come on the radar screen of institutional investors and before institutional equities brokerages start writing on them, our investors actually benefit both ways. You benefit from the strong growth that underlines many of these businesses, and you also benefit from re-rating. So actually, I think it's a good thing that many of these stocks are not well covered at this stage.
Okay, I'll come back to this time permitting, but I want to, labor on this point a little bit more about the risk from small cap funds and, also because of the SEBI classification. But before I ask my question, I want to just take a moment to explain this reclassification to our viewers. So what happened was that till October 2017, there used to be a lot of confusion about what was considered a large cap, a mid cap, or a small cap. So mostly it used to be at the discretion of the fund manager. So in order to standardize the investment norms, the market regulator, that's SEBI, decided to give very strict definitions so that every large cap fund would have the same universe of stocks available to them to invest in. So now, according to SEBI's definition, as you can see, large cap stocks are defined as the top 100 companies according to the market capitalization. The next 150, right, that's 101 to number 250. Those companies ranked by market cap are classified as mid caps, and everything that's below 250, right? So 251 rank onwards by way of market cap is now a small cap. So therefore, by nature of this the nature of the way the funds are constructed, the analysis is that most of the money is now being forced to chase large caps. So whatever is left goes to mid caps, and some of it only is trickling down to small caps, right? So Harshad, my question to you then is this, because when these rules came out, we saw a lot of selling in small cap stocks, right? Don't you think this makes small cap funds, their underlyings more illiquid? I mean, a large small cap fund can actually buckle under its own weight.
Yes, absolutely. I think again you have raised a very, very pertinent issue which everybody should be discussing when it comes to small cap funds and mid cap funds, that liquidity tends to be on a lower side compared to large caps, and therefore there should be some restriction in terms of size. So, beyond a particular size, this strategy will not successfully work because there will be pockets of illiquidity that gets created in the fund, and there could be a problem if disruption happens. For example, you might recall in 2018, when the market was going down, many PMS products faced problem because they couldn't sell the stocks fast enough compared to the redemption that they were getting. What we look when we construct a small cap portfolio, at that stage, at the design stage itself, we take into account the liquidity. So if you look at our portfolio, for example, August end, you will realize that 95% of the stocks we can liquidate within 5 trading days. So that is how we keep the diversification of the portfolio on the higher side, and we limit our position and bets by looking at liquidity. And frankly, at the fund level, I monitor the liquidity of individual stocks. So liquidity is an important consideration while choosing small caps and mid caps. And your observation is right. Beyond the point, you cannot really successfully run a small cap and mid cap mandate without compromising on the mandate. So you often see many large size funds are forced to have large cap stocks, in a way to provide liquidity. I think that's a very inefficient way of doing it, and that is against the spirit of the small cap mandate.
Yeah, that's right. And you can see on your screen that SEBI says that only a minimum of 65% in a small cap fund needs to be invested in small cap stocks. The rest can be in large or mid caps. Now, from SEBI's point of view, of course, that is because they want to protect investor interests, and there are similar guidelines for large and mid caps. I mean, it's not just small caps alone, and in fact, for every category of mutual funds. So the important point that viewers need to note from what Harshad said is that the liquidity profile is something that you need to see in a small cap fund, or it's a good thing to check in any fund, but particularly in a small cap fund that you might want to see. Harshad, do you or your team invest in your own small cap fund, and what's the investment that you have made? How much has it changed since a year ago?
Okay, so I invest in all the funds that I manage, and my team members also do that. It's like having a skin in the game, and we do believe in what we are doing. As I mentioned, the portfolio that we have in our small cap fund, and for that matter, mid cap and other funds, particularly small cap funds, the quality is something that we do not compromise. Liquidity is something that we take care of at the design stage itself. It's not an afterthought. So yes, we do invest in our funds. And if you look at my investment of the proportion of the equity investment I have, I would say high teens is the percentage that I have in small cap fund. But bear in mind that I have investment in all the funds that I mentioned.
Harshad, pleasure speaking to you. Thanks very much for joining in. And of course, a quick reminder to our viewers that if you're looking to invest in a small cap fund, you have to assess your risk profile. This is not a recommendation from CNBC TV18. We're simply bringing to you the funds that are being talked about. One of them is small cap, and because of the kind of fall that they have seen, a lot of people are saying that it could be time to start looking at it once again. But you have to do your own due diligence. You have to check your risk profile. A quick break. On the other side, we continue the discussion, but the focus shifts now to ETFs. Vishal Jain, the head of ETFs at Nippon Life India Asset Management, joins in to talk about the Indian opportunity. Stay tuned.